Hello, everyone. This is Chris Raleigh. I am the CEO of Harvest Returns, and we are here today with Kevin Muno, who is the manager of landscape function management, who is here today to talk about his regenerative cattle ranch in Southern California. Before we start, I've got to go over just our typical risk disclosures. All investments are speculative in nature, and private placements are illiquid. Do not invest money that you will need to withdraw in the near term. The details are on the offering structure on the platform. There's many factors that could adversely impact the returns of this investment, including external factors such as weather and disease, drops in cattle prices in particular, or economic downturns at various levels. This information or this webinar is for informational purposes only and not investment advice. We're not offering securities for sale. If you would like to invest, there is a link and you can read the offering documents. We recommend you consult with your financial legal professionals before investing. So with that, I will turn it over to Kevin Muno. Welcome, Kevin.
Hey, thanks, Chris, and thanks to the Harvest Returns team for having us on. I'll go ahead and add that we have my business partner, Graham Hand, on as well, all the way from Australia. He's there at 5 in the morning in the future. Graham, you there with us as well?
Yes, Kevin.
There
Very
we go.
early.
Got you unmuted. All right. Wanted to make sure you were with us before we started down the journey. All right, everybody. Well, really appreciate you all joining us here today. Really excited to talk to you about this 16,000 acre operation that we kicked off here in Southern California. I'll go ahead and set the table a little bit here. We're going to try to stick to the PowerPoint as much as we can and save as much time for questions at the end of the call. So we'll spend about 20 minutes on the PowerPoint, and from there we'll move into questions. So we'll stick pretty much to the script, just in an effort to be efficient with our time, because I'm sure you all have a lot of questions, being that this might be a newer deal on the platform. I'm sure you all have a lot of questions, so we want to make sure we get to those. So we think regenerative agriculture is really one of the biggest ideas that's out there today. Why we're so excited about it is really it touches on so many areas of our life, you know, from our health to the health of our waterways, to our social well-being and connection to land, and then you know, to the health of our climate and our ecosystems. We believe that it's a really positive solution, and it's always been a solutions-oriented movement. So we're excited about it because I think it solves a lot of the problems that we're seeing in our society today. I mean, the world's pretty much a different place than it was, you know, 4 months ago. And so, you know, we think that making our food system more resilient through regenerative agriculture is a very positive way to solve a lot of the problems we're seeing in the world. And it's kind of a dark situation out there. The UN came out with the stat that we only have 60 harvests left if we continue down this current industrial agricultural model, and that's a pretty scary stat. So how do we build topsoil? How do we farm and improve biodiversity? These are all things that we're going to get to in the presentation, and that our operation is squarely focused on. The foundation of our operation is really mimicking nature to the core. So you're going to see a lot of photos of animals bunching and moving together, and that's mimicking how herds of buffalo and bison have moved across grasslands landscapes for eons. So we're building upon that, and the investment case is strong because when you work with nature, you reduce your inputs over time as your soil builds and your outputs increase. So we think there's a real strong investment case for that. Times are changing. My generation, I'm 32 years old. My generation is really focused and excited about paying a premium for sustainable and regenerative foods. And then even the generation younger than myself, Generation Z, is even more willing to pay a premium for food. And that's based on the Nielsen data there. So it's really exciting. I think you're even seeing some baby boomers start to adopt the eating practices of their kids as chronic disease continues to rise, and we learn more about inflammation and its effect on the body. So we believe grass-fed beef is a pretty good healing cure for a lot of those things. So excited to be on the upward trend of this movement. Again, regenerative is the future. It's pretty much what it looks like right there. We have a few more photos to show you, but bunching and moving livestock at really high density, really high utilizations, heavily dung and urinated area, and then you move on to the next paddock, and that paddock often gets a chance to rest, over a year in our pretty dry land environment. We've been able to show that by doing this method, you can double your profits and significantly reduce your cost and your risk. And Graham's going to talk a little bit about that agricultural risk piece later on in the presentation. We're looking to monetize some of these carbon benefits. We have a couple ideas on that. There's a platform called Nori, which is on the blockchain, and they currently buying certified carbon credits off of ranches for $14 a metric ton. So we see that as an upside market that we're not really modeling in our financials at all. So we're excited about that growing trend, monetizing ecosystem services. And then a little bit more about our operation. We really have one of the world's top teams in regenerative agriculture. Graham Hand is an owner, has been ranching over 30 years. I've got an extensive experience in regenerative ranching myself. And then we have a host of consultants and collaborators. That's a pretty long list that we can't get into today, but we feel really confident about our team. I think it's one of the strongest pieces about this deal. So again, simply, it's 16,000 acres here in Southern California. We're about 2 hours drive from 6 million people. A lot of people that have disposable income and are craving these products that we're producing. So those 16,000 acres are across 2 properties. One's in Warner Springs, which is North County, San Diego, and the other's in Fallbrook on the coast at the Navy base by Camp Pendleton, if any of you have been to that area. Again, we're building upon this wisdom that's been built up over the last 40 years in regenerative agriculture, and we're still only in the first 1 to 2% of adoption. So we're looking to build upon those core tenets of regenerative agriculture, and then layer on what we've learned and add some technology pieces as well, which we're going to get into, such as virtual fencing and walkover weighing scales. So we really feel like we're this is proven stuff that we're using, based on research, and we're adding and we're building on top of that. It's a key point that we want to get across to you. I think many of you might be aware of the problems, but if you're not, there are a lot of issues with industrial agriculture, from the algae bloom, in the Gulf of Mexico, from nitrogen runoff down the Mississippi, to soil erosion in the West, to the depletion of groundwater in the Central Valley in California and other places in the West, and in the Midwest, such as the Ogallala Aquifer. There's a lot of issues. I don't have to go into it. I don't like to be a doom and gloom guy because we're more about the solutions, but there's a lot, aging farmer population, average age of farmers, 60 years old. So we're solving a lot of those with this project. And I think anytime you solve big problems, there's an investment case and money to be made, which is a key point. So this is pretty much what it looks like here. Regenerative on the left, conventional on the right. So set stocking on the right, not a lot of herd impact. You're not breaking up that soil surface. When a raindrop falls on bare ground on the right, the clay particles settle out on the top and cap the soil surface, preventing any growth. You're herding livestock on the left at really high density with long recovery periods. You're breaking the capping on that soil surface, and then you're getting plants to grow, which is the foundation of making money in agriculture. The more green you can have throughout the year, the more solar panels you have up, the more green things that you can turn into money, whether you run those green things through an animal or whether you harvest those green things themselves. It's pretty much the name of the game in agriculture. So the longer you can have photosynthesis, the more you're going to be building your soil, having liquid carbon pumped into the ground. And then the deeper and deeper your root systems are, the effects just start to cascade upon one another. And I think that's another beauty of this as an investment vehicle, is it gets better and better, more efficient over time because you're working with nature. Again, another before and after in a very arid environment. That photo before was in the Namibian desert in Africa, about 4 inches of rainfall. Same here. This is about 4 inches of rainfall, but in the Mexican Sonoran Desert. And it's a famous photo that Alan Savory put up in his TED Talk, before and after, using livestock as the main tool there. So they would get runoff into their dam, and then once they got the soil covered, they didn't have any more runoff. That's why you see the water disappear. So again, a more intact water cycle here, a more intact mineral cycle, a healthier, more profitable system overall. So what it looks like at high density, this is what it looks like using electric fencing. Again, really high density, heavily dung and urinating in area, massaging that grass plant into the ground, creating a mulch. Many of you may be gardeners, and we all know that mulch conserves water in a garden. And so for every stat we like to throw out, for every 1% increase in soil organic matter level, you have an extra 25,000 gallon storage capacity per acre in the soil. I've been to some of the most innovative ranches in the world. Gabe Brown's farm, Brown Ranch in North Dakota being one of them. He's increased his soil organic matter levels from 1 to 2%, upwards of 8 to 9% organic matter. So the potential is just really profound. And when you look at it from a water perspective, he's able pretty much to take his biggest storms in North Dakota and sink them right into the ground. Just think about that really quick from a ecosystem health and a forage productivity perspective. If you're soaking every bit of raindrop, into the ground, your grass, you're going to grow a lot more grass, which turns into animal protein, which allows you to have a higher stocking rate, which we know the stocking rate is the #1 predictor in profitability of ranches. Here's a quick representation of what we'd like to see from a before and after. This is a mock-up done by Georgie Pavlov, one of our designers and talented folks on the graphic side of things. Next slide there, kind of showing you what we'd like to see afterwards. The riparian areas coming back. When you allow those riparian areas to rest and you're not grazing them, allowing the cattle hang out in them, oftentimes trees regenerate themselves, slowing water down in the creeks. You have more perennial running streams when you get your soil covered and you slow that water down and it's not evaporating. When a raindrop falls on bare ground, about 80% of that evaporates back into the sky. So you don't have any infiltration. So we're going to get that ground covered and green again. We want to show you guys just real conceptually what it looks like from a herding perspective. We'll get the fencing up on here. It's really conceptual. You could do this via herding on horseback, via single strand high tensile electric fence, which is very cheap, about $0.01 a foot. Or you could do it with virtual fencing. We're planning to combine all those technologies to get the most cost-effective approach. So you can see they move through these paddocks, grazing at high intensity, oftentimes just only there a day, and then they're moving on to the next paddock, and that paddock gets about a year's worth of rest. And this is how we've built the world's most productive agricultural soils. The Midwest was a giant savanna with herding livestock grazing on it. The valley, Central Valley in California, was also a grassland prior to it being diked and ditched and tilled. And so some of our more productive agricultural areas in the country and in the world, for that matter, were previously grasslands, and grasslands is what built those soils. Here's our team. Myself at the helm, along with my business partners at Ecology Artisans, and Graham Hand is an owner as well. So again, I highlighted it before, but we feel like we have a very, very strong team. My business partners and I at Ecology Artisans have been operating a contracting company for the past 7+ years. We've been profitable, still in business, and we've ranched together before, and this is an expansion on what we've already been doing. Graham has been ranching for 30+ years in Australia, has helped a lot of clients in Australia. Australia has the biggest ranches in the world, so some of his clients running herds of 3,000 to 5,000 head in one paddock and bringing perennial grasses back, transitioning the land from bare ground to perennial grasses every square foot in a matter of 5 to 7 years. So that's our goal. We have a track record of doing it, and we think our team is very well poised to execute on this business plan. Board of Advisors is pretty strong as well. Brittany Colbush has a lot of experience in contract grazing. So in San Diego County alone, we have over 2 million acres of open space. And you'll see on the revenue side of things, we have a line item for contract grazing. So if we have the largest herd in Southern California, and there's over 2 million acres of open space that's just waiting to burn, we feel like we're pretty well poised with the only tool that we think can impact that land in the right way to regenerate it, to reduce the risk of fire, and to heal watersheds. So she's going to help us do that. She's done it at scale in Northern California and advising us on that. Mike Calicrate's been in agriculture his whole life, has an awesome vertically integrated operation in Kansas and Colorado. He's got an on-site slaughter facility at his ranch in Kansas, sends that to a cut and wrap facility in Colorado Springs, and then has a retail store where he's taking the cuts directly to the customer in Colorado Springs. Known him for quite a while, been out to his farm a few times, and he's advising us on our vertical integration strategy. We're pretty much following his playbook, and he's given us a lot of contacts to help us navigate the whole red tape environment of the USDA. So what our products are going to look like, we're going to be going for a really amazing marbled grass-fed beef. Graham has worked with the meat standards board in Australia, which is a grading system much more rigorous than our USDA prime and choice grading system. So we're going to be utilizing that to turn out some of the best quality beef in the business. And we're really taking a beyond organic approach. Organic had its place and served its purpose, but when you can have a 7,000 acre monoculture organic carrot farm, we're not, that's not really regenerative. It's not building soil. It's not building biodiversity. And so we're looking to take that to the next level. And we're excited about some of these certifications that are out there, with the regenerative organic certification pioneered by Dr. Bronner's in Patagonia and Maple Hill, and then the Savor EOV. These are kind of results-based on the ground certifications that hold a lot of weight. And we're really excited to be working with those groups to certify our products. This is phase 2 of the operation, not in this fundraise, but wanted to give you some sense of our future plans to scale. And this would be one of them. Getting a abattoir on site on our ranch would allow us to walk the animals up to the facility, have one bad day, and to be honored how they should, and create it into amazing, beautiful products. So these modular facilities are much cheaper than the brick and mortar. They're not movable, so we don't put them on wheels. You could move them if you wanted to. We're on lease land right now, so if we needed to move it, we could to a new facility. But I think this is really going to allow us to solve some issues that are out there. I think COVID's poked a giant hole in our monolithic industrial food system, and one of those holes was the consolidation in the meat packing industry, and we're seeing that now, how fragile that protein system is. So we're looking to tap into some of this consumer pent-up anger around that, and then the inefficiencies in our supply chain. We're looking to create more of a bioregional supply chain. We don't have a slaughter facility currently in San Diego County. We'd have to go to LA County for that, which is only 2 hours away. But we think as we get deeper and deeper into this thing, this is going to be an important part of our operation. So just wanted to highlight that and kind of give you guys a sense of what the future holds. Some of the technology we're looking to utilize, formed a partnership with Vents, and we're in trials with them on their version 2 collars. I've known Frank Wooten, the CEO there, for quite some time. He's a great guy, really, really great team. They've raised a good bunch of money, and they're having some real success both here and in Australia on the big stations out there. So we think it could potentially be a game-changing technology from a variety of standpoints. Not only do you know where your animals are at all times, you can get health warnings on them, track movements, move the animals themselves. There's a lot of benefits that come from it, especially on the labor side. We're looking at using this along with horses on our 2 8,000 acre leases. We think that's going to really allow us to reduce our fencing budget, which I'll get into a little bit later in the presentation. For the first time ever, cattlemen and livestock folks, producers, have the chance of actually weighing their animals right in the paddock when they come back to water. No more mustering them and collecting them back to central yards. You can have them weighed via an electronic identification ear tag right in the paddock. Pretty game-changing technology as well, because you can auto draft off of this. So you can, say draft everything over 500 pounds, but less than 900 pounds. And then all of a sudden you walk out to the paddock and your calves are sorted for weaning or shipping off. Some pretty exciting technology that we're looking to use, and True Test makes this remote wow product. So just a quick infographic again, our vertical integration strategy, walking that cow up directly to the facility. Whole Foods has this GAP, Global Animal Partnership welfare rating, and it kind of set the standard in the industry from a retail perspective. GAP 5 is the animal that was born on the ranch and killed on the ranch. There's only 2 GAP 5 producers in the country, White Oak Pastures in Georgia being a big one. And so we're hoping to tap into this trend of folks wanting animals that are taken well cared of and animals that are healing the land. Okay, here's sources and uses. This is where we've changed. We acquired the company two months ago, and when we originally listed the deal on the platform, we had a lot of forecasts and pro forma financials in there. We have some adjusted actuals in here combined with some forecasts, and after we've been on the land, working the land for almost 3 months now, we've realized we don't need as much capital expenditure on our high tensile fencing as we once did. So that's freed up some money for us to purchase additional livestock, which in a cow-calf operation is really critical, absolutely critical, because the quicker you can grow your stocking rate on the land, the faster you're able to generate more margin. And so with the way that we manage the animals, they're managed in a way where one guy can manage, upwards of 1,000 to 1,500 head in the way that we manage with our low stress stockmanship and our virtual fencing. And so we can spend pretty much every cent that we're saving on our water development and fencing on our first forecast into additional livestock, and that's kicked our dividends up and just our overall revenue production up. You see a hockey stick in our first forecast around year 10 because we're no longer keeping our heifers. We're selling both heifers and steers, and so really what we're getting at here is the ability to reach that stocking rate, that stabilized stocking rate in year 5 as opposed to year 10. So you see that hockey stick jump in year 5, where we're starting to sell the heifers and the steers in year 5. So just wanted to highlight that here. The adjustment, you can see the 479,000 in additional livestock. I think we only had budget previously for 100,000 in additional livestock. So an extra 379 in additional livestock expenditure on the capital side of things to get us to that stabilized stocking rate. Just a quick summary, and we have a detail on the next slide of our year 5 stabilized income statement. But this is some of our key ratios. You can see, our margin and return on sales significantly grows to about 80 or 90% by year 5. That is due to the fact that we're really growing our herd without growing our labor, which is our number one cost. And by grazing the way that we graze, we never run out of feed. We always have enough stockpile out in front of us. So we're never getting in a place where we're feeding hay. And Graham's going to talk a little bit about that towards the end and probably answer a lot of questions on that in the question and answer time. But it can be a really low cost business, and we've done this before. A lot of Graham's clients are operating at about an 80 to 90% return on sales. So that's a key metric we want you to see. Return on assets gets pretty high up there. And then the cash on cash, the return on equity is also pretty high. So we modeled in a sale in year 6 here at a multiple of our operating cash flow. And that's what you can see at the 14 million. And that's what's generating that IRR right there. So happy to talk more about this in the question and answers. It's very summary right now, but in the next slide, we'll get a little bit more into the details of the income statement. Here's an income statement again, year 5 and some of our assumptions there. So what we're looking at is quite a bit of revenue coming in from online meat sales, a little bit coming in from contract grazing. And that meat sale price is with a carcass of about 600 pounds, finished animal selling for about $5 a pound. That's pretty conservative. You're going to see in a later slide how we arrived at our metrics based upon research data. Every single one of our direct-to-consumer ranching friends are sold out due to COVID this year. We think there's going to be a ton of legacy demand pent up. Folks are now connected with their local farmers and they care about it. They see the fragility of our industrial global food system, and they don't want to be caught in that place again in the future. So I think you're going to see a lot of continued demand after COVID for direct to consumer farming operations, which we plan to really be. So we're selling it at a premium, pretty low supplements. You know, our lease costs are in there. You can see for both leases, which are driven by animal unit measurements per month. So we pay by the month, and we're at each lease about 6 months out of the year. Some transportation costs that go up there as we grow the herd with more livestock, and our labor assumptions growing as we have more need for marketing labor and ranch labor. So we can, you know, break those numbers out. I know it's pretty simple, but we wanted to give you a sense of what our income statement actually look like, stabilized pretty much at year 5 at our stabilized stocking rate, and some of our key assumptions there. Here's what we the exercise we did on the breakdown of an actual animal and what it arrives at. So you can see the highlighted cell at the bottom there. We can sell an animal into the marketplace if we were to kill it, slaughter it, USDA, sell cuts on our website to consumers. We sold everything from that one animal. We get about 61.78 from that animal. So when you get upwards, you know, of 1,000, 1,200, 1,300 head on a land base, that's where those revenue numbers are coming from. And again, your labor doesn't really grow as those herd numbers grow. I'll point out really quickly that there is opportunity to grow this enterprise quite quickly. There's contiguous leases that we have our eyeballs on that are with the same landlords and could triple our operation. So there's significant growth both on the slaughter side and on the scale side that we've identified, and wouldn't be very hard for us to go after when we're successful. But our company, Ecology Artisans, is the manager. Equity investors coming in as passive members. All that money is flowing into Landscape Function Management. The manager, we put in close to, you know, upwards of $35,000 of the deal in ourselves, as well as some sweat equity to get the deal going. And then we acquired Mendenhall Cattle Company, and then Pastureland Provisions is our wholly owned subsidiary that's doing the marketing. So all the profit and losses flow up to Landscape Function Management. And we separated that out for liability purposes. If anyone was to get sick from eating some food, and vice versa, if anyone was to get hit by one of our cattle on the road or something like that, they can't come take the assets of the marketing company and back and forth. So quick slide on our organizational structure.
Work that we've been doing in Australia based on our experience is to evolve the grazing management. So we're not the only ones that are using grazing management to regenerate soils, but where we've gone is to evolve it to take over the risks. And the three main risks are there, you know, debt, rainfall, I think of it as in Australia, but you have more seasonal risk in the US than we do, and then market price. So, and they're in order. So the debt compounds through the business. The seasonal, next one is the seasonal risk. So, you know, in Australia, we're pretty experienced on drought. So how do you reduce those three risks? And that's what we've designed for. So I think it's the evolution or the an iteration of grazing management that allows us to cope with that. So, and it's got there quickly just how we're going to do that. So, you know, raise enough equity to ensure we maintain over 50% equity. What we're doing is managing the recovery times of the grazing. So we're going for much longer recovery periods to ensure that we don't run out of grass. And we've got a lot of history of how that works. All the most successful grazing ranchers in Australia are using this approach to cope with rain so that they can skip through those shorter rainfall periods. So not only are you improving the soil, you're making sure that you've always got an inventory of grass in front of you. So we're moving out to longer recoveries. One of the reasons people fail in Australia is basically because they don't have time to react to the seasonal changes with recovery is too short. So we've modified that. And then because we've got such a low cost of production, where we're shifting to what Kevin said before, that 70 to 90% of each sale dollar we're keeping, that you can really just always make a profit no matter where the market price is going, is what we've found over time.
So we've got a couple of questions, and then for additional questions, if our viewers would like to ask, there's a Q&A button you should be able to use to chat those questions to us, and we'll get them answered. And if you'd rather ask offline, you can ask via info@harvestreturns, or send us a message on the platform. That's another way to do it. So first question is, in dealing with the alternative protein market, we like to discuss so often, and it's, do you see any sort of threat with these growing plant-based protein companies to the cattle business?
Great question. It's really interesting during COVID how when the meat shortage was going on, I saw so many photos flowing around of the Beyond Meat and Impossible Meat still on the shelf and the real meat off the shelf. I got a kind of a kick out of that. But on a more serious note, it's definitely on our radar. Obviously, these companies are raising a lot of money. It's quite funny, the human condition is liking the next piece of technology, and this meat that's created in the lab is going to solve all these problems. Well, we're very aware of the life cycle assessment analysis of plant-based meats and meat created in a lab versus the feedlot model versus our model. So while the plant-based meats, has a big drive for consumers to reduce their impact on the environment, it helps them do that a little bit from the feedlot model, meaning it does emit a little bit less, according to this study put out by an independent third research organization studying the feedlot model, plant-based, and then White Oak Pastures in Georgia, the ranch I managed before that's been managing regeneratively for about 20 years. So the plant-based was a little bit better than the feedlot, but they're both still emitting carbon. The regenerative was actually sinking carbon down into the ground. And so that's a key piece. That story's been getting a lot of attention. I think that's a big draw for plant-based, eaters only, vegans and vegetarians. I think that movement I see it as a positive. I know more and more vegans and vegetarians that are switching to a plant-based lifestyle just because they want to eat better, and they're getting more awareness around their food. But I think once they get into that journey, sort of regenerative agriculture is at the back. It's a much more complex, rich, dynamic, positive story. Instead of excluding from your diet to help the planet, you can be positive and actually eat something to help the planet. And that's what we're all about. And I think once folks latch onto that story, they go vegan for a few years, they have some bacon, again, he's usually the gateway back in. And then once they get the bacon, they're hooked and they're back onto regenerative grass-fed beef. So that's kind of a little bit of color of how we're analyzing it. And I don't know, Graham, if you have anything to add to that question as well.
I'm happy. That was good, Kevin. I can't see how, even if we don't eat beef, we're still going to have to run the animals to regenerate the grasslands. There is no technology that can do that. So I just see it as a much healthier alternative, sort of to be eating grass-fed beef with its correct balance of fats and the whole health from doing that. I'm sort of pretty strong that it's a bit toxic to eat grain-fed beef.
Okay, thanks a lot, gentlemen. Next question. Are there tax benefits to regenerative cattle grazing?
Great question. So you can see we had a depreciation line in there, and when Trump came into office for project-based businesses, he allowed a bonus depreciation line item there in year one. So any of our capital expenditures that we do, we can depreciate all that in year one. So we'll effectively pay no tax in year one and probably have some tax loss carryovers. I didn't go into that level of detail in the income statement, in the projections. I'm happy to talk about it. But there definitely are, when you acquire, a company like this and you pay a lot for equipment, you can depreciate that in the first year, and then you have those tax benefits that carry over in the first few years, which obviously saves us cash and allows us to distribute that funding to the investors more quickly. So yes, there there are some nice tax benefits. Not only are there tax benefits, but there's a lot of preferential financing in agriculture. People got to eat. So that, the bank that we're banking with is American Ag Credit. They're actually a livestock credit corporation, and they have some really nice preferential rates for their producers that are subsidized by the government. There's a ton of grants that are out there available for the type of production that we're doing as well, that we're looking to tap into, and we're not currently modeling those into the financials. So yeah, there's a lot of advantages of farming the way that we do, and agriculture in general as an investment strategy.
Okay, hey, thanks, Kevin. All right, another question. You sort of mentioned COVID and the increase in packing, or the problems with the packing plants, the large-scale packing plants. Yeah. Is there any potential impact of this investment to the ongoing COVID pandemic that you can, from your perspective?
Well, I'd say that COVID's actually, done us a service for our direct-to-consumer model. There's a very, very strong demand that we believe is going to last. Our packing plants locally actually have been affected a bit, but they haven't had any major breakouts. So the one we're going to look to process at first is still up and running and hasn't had a breakout. We have two within 2 hour drive limit of us, which is actually pretty good. When you look at other parts of the country, Montana or some Wyoming, some of those areas up there, 6 to 8 hours to their local, closest local USDA processing facility. So should one of those plants go down, I think we could be affected, but then we could also just process on farm. We have a few connections in the mobile butchering industry where the customer purchases the animal whole, and then they sort of coordinate the slaughter and butchering process, and we just sell the animals to them whole at about $3.25 on the hoof. So we still have ways of accessing the marketplace more directly with those customers in that model. So
next question. So you had mentioned that you've got a better handle on your operating cost and your capital expenses, and will you be presenting new terms and updated terms on the Harvest Returns platform?
Yes, we will. Yep. And we presented those today in the PowerPoint, and then Chris and Austin and I are going to work together to present those. So yeah, we're actually really excited to show you guys what the financials look like and the terms from our first go. It's a much quicker payback, a much earlier sale, and then some earlier distributions to you guys. So yeah, we plan on updating those here shortly.
Okay, great. And just to amplify what Kevin said, we will be putting out those terms on the platform and via an email. So whether you're on this webinar or you're listening to it in the recording on the private YouTube channel, you'll be able to catch up and see what those terms are here in the next several days. So, okay. I don't see. All right. Well, I appreciate everyone joining us today. We're excited about helping Kevin doing really, really innovative, what we see as kind of cutting edge ranch techniques. And we've worked with some cutting edge producers before, but he's in the regenerative side. He's probably the leader. So we'll look forward to hearing from our investors. And again, if you have questions, feel free to ask us on the website or via email, and we'll make sure that those get in Kevin's hands and he can answer them. Thanks very much. Thanks, everybody.